guys, welcome back to Dawn Investments. Today's video is just going to be a brief video giving some quick tips and tricks on how to consistently trade and profit off of ETFs on a daily basis, especially times like this where the market is red and a lot of people may have red days. This is a good way to on a consistently, even on the red days, have a green day in your personal account. Um, because of how ETFs can kind of get a little complex, so because of that, I'm not going to go too in depth in this video. But I know a lot of people are asking me individually on like how I trade them and how I find them kind of, and so I just wanted to give a quick rundown that anyone can use kind of just to understand how to trade these type of stocks. So getting right into it, giving a quick breakdown of them. ETFs are things like popular ones that we usually trade a lot. It's like DGAS, UGAS, um, JNUG, JDST, and like today we traded DUST. All these are ETFs, and the basic idea behind them, they move a certain way every day, and they kind of their movement is based on various underlying markets. For example, DGAS and UGAS, they track natural gas futures that you can find like /NG. You can just find these on Google anytime. Um, and yeah, once you find the natural gas futures, you can kind of relate UGAS and DGAS and a couple other ETFs, but UGAS and DGAS are the main ones I trade to you know you can kind of relate them to this type of to the trends of this chart. When this thing goes up, UGAS goes up, and when this goes down, DGAS goes up. Because DGAS is the inverse of UGAS, in this chart pattern right here is the inverse of the natural gas futures. So basically, you can kind of, in essence, to really trade these profitably, you can kind of analyze the underlying market, the underlying chart of whatever ETF you're watching, and create patterns and look out for chart patterns on that chart, and then based on that, make an educated decision on how the ETF you're trading is going to move. So a lot of ETFs like DGAS and UGAS are, if you can see, it says 3x. That just means it moves 3 times the percentage of its underlying chart. So /NG will move. This drop here was like 15%. So on UGAS, It's usually 3 times that, give or take, and that's how ETFs usually kind of makes more significant gains than the underlying market, which is why people trade those. So, for example, for most of these ETFs, they kind of move on average on a day-to-day 5 to 10%, and one or the other, either the inverse or the regular one, is gonna move that way. So basically, the hardest part is just finding which one is gonna move 5 to 10%, and then trading that one. Like for example, just to keep it consistent, looking at both UGAS and DGAS on a day to day, one will move around, that 5 to 10%, and the other would drop down 5 to 10%. As you can see on this chart of DGAS, we didn't trade this today, but it moved up around 6% today from its lowest point to its highest. And then UGAS dropped similarly 6% around there. So based on that, if trading these consistently, you can get around 5 to 10% every day, which for slow growth, if that's what you're looking for, isn't that bad. And especially when you can't really find any other stock to trade, or the whole market's red like it was today. You can really just look towards these ETFs, because usually if one is down, the other one is going up. Like, that's that inverse relationship, and people can profit off of that pretty easily. So then it gets to the matter of, how do you know which one is going to go up, and how do you know which one is going to go down? Well, the answer to that is basically just using technical analysis and looking into some fundamentals. That's the way I do it. I look into some fundamentals and more so technical analysis. understanding chart patterns, where the stock is going to go, there's room to grow. For example, looking at DGAS, I have a bunch of these trend lines set as support and resistances. So I noticed that if it breaks the 27.4, it has room to grow, but not just based on that would I trade it, but then I will look at UGAS and then natural gas futures to understand where it's going to drop to. For example, in natural gas futures, I don't know where it was this morning based on DGAS, but this dropped from a certain point, and during the point which it started dropping, one could have probably told by technical analysis and chart patterns and things like that I kind of explained in other videos or private message how you can notice them. But based on that technical analysis, you can see that NG was going to drop, and from there you can trade into DGAS. And looking at it past the technical standpoint, you can actually look into the futures market. Look at news. It has news every day, stuff that's affecting the price, stuff that'll bring the price down. Once you look there, you can go to websites like uh, you don't have to use Market Watch, but you can use something like this, and it'll show you things like this right here. Oil. Um, maybe you can scroll down, look at natural gas. Natural gas, the futures is actually green, so you can anticipate that natural gas might start going up soon. And based on that and like other due diligence, looking at other factors that you may find or come across, then you can make an educated decision on where to trade. But keep in mind that a lot of these are, since these move kind of like 5 to 10% a day, I usually work these as a day trade for just for safety reasons, because as you guys saw, the natural gas futures are green, but DGAS, which is the inverse, moved up. So then holding this overnight is a bit risky. Since the natural gas futures are green, that means DGAS can actually start declining, and you guys can go up pre-market. And as you guys can see, pre-market, a lot of movement can happen. This thing went up around 8% pre-market. So in just the same way, you guys probably went down another 8% in the same kind of way. So when when the futures or something like that is green or red, that should really kind of give you a signal on whether or not you want to hold it overnight. But then after you look at that, that's when you start looking at chart patterns. For example, here, you guys has a lot, some 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 room to drop before it reaches a support here at 48. But based on just that quick due diligence that I saw that the futures are green, you guys can bounce here. It doesn't really, just because the resistance is low, that doesn't mean that it's going to keep dropping or this is a point to get in. You should really do like a comprehensive outlook. I'm not going to go that deep into the video on how I do all the due diligence onto ETFs, but if you just want to do like a quick 5 minute thing, looking at Market Watch and then looking at whether the futures is green or red, can really tell you like the basic story, and then combine that with quick technical analysis. You can kind of do that due diligence in like 5 to 10 minutes and kind of get a rough idea of where the market's going or which ETF is going to move. Also, based on pre-market, you could kind of tell this. It doesn't happen as perfect every day because something can spike up pre-market and then it can drop. But like for today, it spiked up pre-market and it kept going, so that's another positive sign. But don't just base your trade based on that. So make sure you're wise with your trade, and know what you're jumping into before you actually jump into it. Another example I can give is something we actually traded today. It was DUST. Its underlying market is gold futures. You can see that with slash GC. And in this one, if you're looking at the 180-day 4-hour chart, I kind of have some things set already. Um, I already have this little support here set up at 1330, and that means that Dust and something like JDST would go up while JNUG will go down because JNUG is tracks this, and then DUST and JDST are the main ones that I trade, are the inverse ones. There are other ETFs out there. I'm just giving these as examples. But see, as this is going up, that means the UST is going down. And based on that conclusion, holding this overnight can actually be a risky move. But we only day traded this today. We bought in at market open, not because of the pre-market or anything, but we did our due diligence pre-market and last night, and we assumed that there was a chance that DUST and JDST might have a green day based on the research we based on the research we did. So we paid attention early in the market. We bought it at a low point. We got in at a good price. I think it was 23.90 that we got in, and we just held throughout the day. With our stop loss, managed risk, and it kind of just rose. It rolled the EMAs throughout the whole day, and then we ended up selling here for around a 3% gain. It wasn't that much, but like I said, it moves kind of like ETFs kind of move on average from what I've seen around 5 to 10% a day. So if I would have bought in here, which I didn't held, I would have got around 6%. But at the time, I just wanted to sell early. Um, I want to lock in profits. Like you don't need to lock in profits as early as I did. You could have held all day. But for me, I just want to lock in profits. And you remember, once you lock in profits, you can always just rebuy. So I always would suggest, um, going the safe route and locking in profits while you're ahead. And if you see that it's showing bullish signs again, you can always jump right back in if you're around. And as you can see, the inverse, well, the one that actually tracks the gold futures, JNUG, was didn't do that well today. Kind of just moved steadily all day, up and down, kind of just the opposite of what the UST did. And JDST. JDST had a similar chart to DUST. I know some people prefer this one, and other people prefer DUST. They move the price movements is very similar, so um it's up to you. It's basically based on your preference. I've traded both. Uh, JDST is obviously more expensive than DUST, so it's kind of just your preference, but they move in a very similar fashion. So you would receive similar profits, independent of whichever one you decided to trade. Just rounding up the video, I really want to emphasize the importance of knowing when to swing these stocks and when to not swing them. Swinging them can yield very good profits, especially if you look at the chart. You know, over here around 17, if you notice this bounce at 17 had this resistance line, the support line drawn, you would have noticed that this has room to run around 154%. If you bought in here and waited till it reached all to this price point, which, like, please keep in mind, there's no guarantee. But so far from that point, it's up around 60%, which is a great return. Um, but there's no guarantees that this can happen, and swinging these overnight can often be risky. So you just have to keep that in mind, and keep your risk tolerance in mind when trying to hold these overnight. And before holding these overnight, make sure you do your research on whether or not the underlying market will go with you or against you. Based on the chart pattern, something like DGAS has room to run, still has room to run around 60%. But for this, I would just set my alerts, and I wouldn't swing this unless like I was sure that it would go up pre-market, based on news, chart patterns, and other due diligence that you would have to do on your own, or check our Discord. I'll try to put stuff like that in there and say I'm swinging it. But a lot of people do, and a lot of people see great profits from this. But the basically the safest bet to really get to the core of the video, to consistently profit off of ETFs on whether or not the market is red or green, is the best thing is just to day trade these, which is what they're really good for. Swing trading, you can get a lot of profit, but always the safest way is to day trade these, buy them at low points during the day and sell at high points. Like I said, with this, you would have made around 6%, which isn't that much to a lot of people, but when the market is down and you don't have many other options, this is 6% for me is a great return. But if, I don't know about for everybody else, but 6%, 5 to 10% on a daily basis is a great return. And really, the only dangers of trading these is if you trade wrong because you didn't do enough research or you jumped in at a bad price point. Uh, and that can kind of be the only danger because just as it can go up 5 to 10%, like if today, if you looked at you guys and you chose you guys and you bought in here, it could have dropped steadily like 5% within that next, what was this, almost 30 minutes. It dropped that 6%. So be careful when trading stocks. These aren't foolproof, but when the market is red and you looking for something to trade, always look out for these ETFs, and a lot of them move very well. So I hope you add some of these to your watch list and make those consistent profits. Thanks for watching. If you have any questions, just message me, or if you want me to go more in depth with you, just message me in the Discord or ask me in the Discord. I'll be happy to help. But that's really it. Thanks for watching. I hope this helped.